Every empire swears its money is safe. Every government insists its promises will last forever. And every time, history proves them wrong. From Rome to France, from wartime America to modern Lebanon, people have woken up to the same shock. Savings that took decades to build suddenly mean nothing. Salaries lose meaning. Plans collapse. Futures get rewritten by forces most people never see coming. Collapse isn't rare. Collapse is the rule. The real question isn't whether financial systems fail. They always do, sooner or later. The real question is this: what protects you when the system you trusted stops working? Here's the most dangerous mistake people make. They assume permanence. We look at our bank balance and feel safe. We look at our currency and assume it will still buy the same life next year. We assume the rules will hold. But money isn't bedrock. Money is trust. And trust can vanish overnight. That's why history is so brutal and so useful. Every collapse leaves behind patterns. What holds value, what gets trapped, what gets diluted, and what disappears. And the survivors usually have one thing in common. They didn't trust blindly. They prepared before the crowd was forced to. Take the Byzantine Empire. People remember it as the half of Rome that somehow survived. And for centuries, it did. One reason was its gold coin, the solidus. It was so reliable that merchants across Europe, the Middle East, and parts of Asia accepted it without argument. For a long time, it functioned like a reserve currency. You'd think they would have learned from Rome's earlier disaster how the silver denarius was debased until it was basically political theater. But no. Eventually, the Byzantines started diluting the gold too. At first, it was subtle. Then it became obvious. And once trust cracked, the stability that coin provided cracked with it. What survived? Not decrees, not slogans. Real value survived. Gold held outside the system. Land outside imperial reach. Tangible assets that couldn't be adjusted by a ruler with a budget problem. But not every collapse comes from rulers playing with money. Sometimes it comes from shocks that hit like a hammer. The Black Death is the clearest example. Between 1347 and 1351, Europe was devastated. Entire neighborhoods disappeared. Trade routes broke. Whole regions changed. And yet, the economic story wasn't just everything got worse. It was stranger than that. When half the workforce disappears, labor becomes valuable. Survivors can demand higher wages. Land can become cheap because there aren't enough people to farm it. Families with liquidity, goods, silver, or even just strong skills suddenly have leverage. And yes, it rhymes with modern times. During COVID, supply chains snapped. Governments printed enormous amounts of money to keep the machine from freezing, and those with liquidity bought assets while everyone else tried to survive month to month. Crises don't just destroy, they redistribute. Then there's the collapse you least expect. Banking collapses. Renaissance Florence looked untouchable. It was Europe's financial capital. Powerful families ran banks that seemed too important to fail. Then kings defaulted, especially on massive war loans, and those banks collapsed like dominoes. Depositors were ruined. Trade froze. Reputation didn't protect anyone. That lesson never died. It shows up again in 2008, when a single failure triggered global panic. It shows up in Lebanon when banks froze accounts and people discovered their deposits were basically trapped behind a political decision. Here's the hard truth. An institution's promises are only good until the day they aren't. And when they fail, they don't fail politely. They take your access first, then your value. War is another machine that kills money fast. During the American Civil War, both sides printed to fund the fight. In the North, greenbacks expanded the money supply. In the South, the Confederacy printed desperate amounts. The result was predictable. The more paper flooded the economy, the less each note meant. In the Confederacy, prices went insane. Paychecks became worthless before they could be spent. By 1865, Confederate currency wasn't weak, it was dead. And the rule is always the same. When paper dies, hard assets speak. Food, land, tools, gold, anything real keeps value while promises evaporate. Revolution can destroy money even faster than war. France, in the 1,790 seconds, is the classic case. The government issued paper money backed, in theory, by seized property. Then they printed more and more. Every new issue diluted the last. Prices spiraled. Wages couldn't keep up. People stopped trusting the paper. Farmers refused to sell food for it. Barter returned. Social order cracked. The winners weren't the ones holding patriotic paper. They were the ones holding food, silver, property, things the state couldn't print. And the losers were ordinary people who did what they were told and trusted the new promises. Now jump forward to 1,997 inches Asia. Thailand's currency peg broke. Debts priced in dollars became deadly overnight. Panic spread. Currencies across the region collapsed. Jobs evaporated. Savings lost value fast. Governments begged for rescue. And rescue came with conditions. And again the pattern showed itself. Those who held dollars or assets abroad were safer. Those trapped in local currency took the hit. It's a lesson as old as empires. Debt in someone else's money is a trap. When the storm hits, creditors don't drown, debtors do. And then there's the collapse that should scare modern people the most, because it feels unthinkable until it happens. Banking access collapses. Lebanon is the warning. Accounts frozen. Withdrawals limited. Currency losing most of its value. A lifetime of savings turned into pocket change. People lined up at banks, begging for access to their own money, and the system simply said no. That's the sentence most people can't accept. Money in a bank is not a treasure chest. It's a loan you've made to an institution. And in a crisis, that institution can decide you don't get it back. Not today, not in full, not in real value. So how do you protect yourself? History doesn't give one magic answer. It gives a pattern. Real assets survive when paper fails. Liquidity matters when prices dislocate. Diversification matters when access is restricted. And skills matter more than people want to admit. Because in every crisis, money loses meaning but production doesn't. People still need food, repair, trade, shelter. The people who can provide those things don't stay powerless for long. Collapse is tragedy, but it's also a transfer. From the many who trusted to the few who prepared. History doesn't repeat, but financial logic does. And if you ignore it, it will crush you. The same way it crushed everyone else who thought, this time is different. If this gave you a new perspective, leave a like and consider subscribing. More importantly, stop treating money like bedrock. It isn't. It's trust.